But we clearly have some tensions here between some of the Western aligned advanced economies and maybe even some of the broader global emerging markets, China in particular. What I would emphasize, though, is that bringing in this de-risking term is really recognition of the economic reality, and that is that we cannot cut out a major part of the global economy. We're all interconnected, but we're going to manage these connections. And with this term in particular, it's something that the Europeans injected into the debate, saying that, well, we don't want to go to all the extreme. We need to manage the process. De-risking is really a lighter touch form, diversification of supply chains. And that is something that found its way into the G7 communique and really hints at a bit of a thaw here when it comes to economic realignment. In the US as well, we've had some noise from the US Treasury Secretary in particular that extreme decoupling is really not feasible, and therefore we see a bit of a lighter touch. It doesn't mean we're backing off of some of these technology restrictions, but really sending a signal we don't want to completely decouple and cut our ties, because realistically, it's not realistic given how important China really is for the global economy.
Yeah, absolutely. I mean, it is nice to see some wiser heads prevailing here. You know, after having spent the past 30 years working on this globalized economy, decoupling would have been, you know, shooting yourself in the foot on the order of Brexit to a large extent. But, you know, backing away from that ultra hawkish stance is not quite the same thing as saying, actually, we see the value in global trade and cooperation, is it? It does seem as if in the US Congress, at least, there is still a very strong trend towards saying we want to make this as hard as we can for China.
That's right. It doesn't mean we're out of the woods here when it comes to these risks. We may see even more technology restrictions, technology transfer restrictions come in, and that certainly remains a part in the political environment, domestic political environment, and some of the G7 economies really points towards a hardening potentially of the positions. But I think it's important to recognize that we have changed a little bit, reframing the debate towards de-risking, and that is in some ways reduces broad economic uncertainty, even if it opens the path for more targeted action itself. And that is very important for certain sectors, high technology in particular, but it does raise the specter also that the broader trade flows that we're seeing are not going to be as severely disrupted. We're still going to see bilateral investment go in, and broader sectors are not necessarily affected by this. So the G7 is trying to walk a very fine line here. But of course, as you rightly say, it's not necessarily backing away entirely from potential new restrictions. It's just saying, hey, we're going to be more focused in terms of what we're going to implement.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.